So we are doing this cash flow statement and they have asked us to calculate the cash flow from operating activities. Are you with me?
Yes, ma'am.
Cash flow from operating activities always starts with profit before interest and tax.
Interest and tax.
So this is
Yes,
the
ma'am.
opening and this is the closing.
Yes, ma'am.
Surplus.
Yes, ma'am. Right.
So what do you do? Closing minus opening.
Minus opening.
So
Yeah.
this would be 20,000. Are you with me?
Yes, ma'am. Yes, ma'am.
In that, there is some things that is to be added, transfer to reserves, proposed dividend, provision for tax. So all that is not there over here. Can you see this?
Yes, ma'am.
Can you
Not
see
there.
it?
No, no, we can't. It's not there.
Okay, fine. Now we will read and we will then categorize the things. Okay. What is trade
Yes, ma'am.
receivable?
Ma'am, trade receivables. It will be
Is it current
no
asset or is it current liability?
trade receivables. No, ma'am. I don't know. Sorry.
I will put a list for current assets and current liabilities for you.
Okay. Yes, ma'am.
Inventories,
Yeah, inventories.
trade receivables,
Okay. Yes.
okay, prepaid expenses,
Yes, ma'am.
and outstanding income,
Okay.
current liability, and other receivables.
Yes, ma'am.
When I talk about current liabilities, it will be trade payables,
Yes, ma'am. Trade
outstanding
payables. Outstanding expenses.
and other payables.
Okay.
Okay. These anything that comes over here would come in the working capital changes.
Yes, sir.
Okay. So what is trade receivables?
Trade receivables is current asset.
Current assets. Is the current asset increasing or decreasing?
It is this thing decreasing
Okay. So
by
current asset,
6,000.
it is decreasing from last year to current year. 6,000 is decreasing. If current assets is decreasing, so you will add or you will subtract.
If current asset is decreasing, we will I think subtract, right?
Current asset works in opposite direction.
Oh yeah. Oh yeah, sorry. It will be added. Yeah.
So
Sorry, I
you
was
will add
calculating.
6,000. How
Yes, ma'am.
about provision for depreciation?
Provision for depreciation. And that is this thing. That is current liability.
You start
In
with
depre
profit before interest and tax.
Yes, ma'am.
You will add your non-cash, non-operating
Oh wait.
expenses.
Yes, ma'am.
You will add your non-cash, non-operating expenses.
Yes, ma'am.
Depreciation is a non-cash expense.
Yes, ma'am.
So you will add it.
Yes, ma'am. You will add it.
Yeah.
Yes, ma'am.
Hmm?
Yes, ma'am. We'll add it on cash expense.
Okay. So this will be added. It is a non-cash expense. Then inventories.
Yes, our inventories is a current asset. So is it?
It is a current asset. Increasing
Yes,
or
ma'am.
decreasing?
It is increasing.
It is increasing. So what will you do?
Yes, ma'am.
Yes, ma'am. What?
We will. 1 minute. If current asset is increasing, then we will subtract it.
Hmm?
Current asset is increasing, we'll subtract it.
Subtract how much?
How much? By 30,000. Wait,
Hmm.
not 20,000. Sorry.
Okay, fine. Outstanding rent, outstanding expenses.
Yeah, outstanding expenses.
What is it?
That is a current liability.
Okay, Okay, that is current liability. What will you do for it?
It is decreasing, right? So when current liability decreases, it will be subtracted.
Current liability is decreasing, so it will be subtracted. How much?
How much will it be?
21, 9,
12.
12,
Yes.
9,000.
Okay, 9,000.
How about goodwill?
Goodwill. That is a current asset, right? No, liability. Liability.
Liability. Goodwill is a liability.
No, it's not a liability. It's liability something you get. It's asset. Goodwill of
Sorry?
current asset. Goodwill.
Can you tell me goodwill is increasing or decreasing?
Decreasing, decreasing.
Goodwill is decreasing. Whenever goodwill is decreasing, okay, it is an
Yeah.
operating expense. This is called goodwill amortized
Okay. Oh,
or goodwill written off.
okay.
Okay,
Goodwill off. Yeah.
so it is a non-cash, non-operating expense.
Okay. Non-operating expense.
Non-cash, non-operating expense, so it will be added the way you add
Yes.
depreciation. Okay,
Okay.
the way
Non-cash.
you add
Right.
depreciation, the same way you
Depreciation.
will add goodwill amortized.
Goodwill. Yeah.
Okay, come on. Now tell me, how about this? Prepaid
Which one?
insurance. Prepaid insurance.
Prepaid. That expenses. Current asset.
It is
That
a
is
current
being
asset.
decreased.
Current asset is decreasing, so
So added
you will add it. Trade
1,000.
payables.
Yeah. Trade payables. That is current liability. It is decreasing.
Current liability
Subtracted
decreasing by 6,000, so you will subtract it.
6,000. Yes.
Okay, so now you know what is to be added and what is to be subtracted. I'm putting
Subtracted.
this image over here. Now
Okay,
see,
fine.
you
Yes.
will start with what? You will start with surplus,
Surplus.
closing minus opening.
Yes, ma'am.
Add non-cash, non-operating expenses, so you have one depreciation
Yes,
and
ma'am.
you have goodwill written off.
Yes. What will written off?
Get operating profit before working capital changes.
Operating profit for working capital changes. Yes.
Then you
And
have working capital changes. So first you will deal with current assets.
yes, sir.
Increase in trade receivables.
Increase in trade receivables. Current asset.
Decrease in inventories.
Decrease in inventories.
Okay.
Current asset.
Okay,
Okay.
there
So
is a decrease in inventory that you will
yes, ma'am.
subtract. Then there
Subtract.
is a decrease in outstanding rent.
Yes.
This you will subtract.
Subtract.
Okay. Then there is an increase in insurance, prepaid insurance.
Yes, ma'am.
This you will add. And decrease
Yeah.
in creditors, this you will subtract.
Subtract.
Okay.
Trade payables. Yeah.
After you get operating profit before working capital changes, you will go in the order, whatever order we have over here, not like this. Then you will
Yes,
get
ma'am.
cash generated from operations.
Okay. Cash generated from operations.
That's it. Then less tax paid, there is no tax paid given to you. You get net cash flow from operating activities. So just do this sum, I will wait for you.
Okay, ma'am.
Come on, tell me.
Yes, ma'am.
Come on, tell
So,
what.
ma'am, first, ma'am, we'll do net. It is given here, ma'am, net profit after provision for tax and payment dividends. So, like, we do like this thing. Provision
We
for
want
tax and
profit
payment dividend
before
have been
tax.
subtracted.
We
Yes, ma'am.
want profit before tax, before interest, before dividend.
Yes, ma'am. So for that, ma'am, we will have to add provision of tax and proposed dividend,
Okay. So you will add
which
this.
is yes.
Okay. Then
Then, ma'am, we'll do this thing. What we have to like add.
add
So
non-cash, non-operating expenses.
Yes, yes.
So depreciation is which expense?
Depreciation is this thing,
Non-cash expense.
non-cash expense.
So you will add.
Yes, ma'am.
Loss on sale of machinery is which expense?
Loss, non-cash expense.
Non-operating expense.
Non-operating expense.
So this is also added.
Yes, ma'am.
So depreciation is added, loss on sale of
Added,
assets is added,
also is added.
goodwill written off and patents amortized. Even this is added.
Yeah, goodwill written off. It'll be added.
Hmm. Okay.
Okay.
Then profit on sale of asset.
Profit on sale of asset. That'll be this thing subtracted, right?
Yeah.
No.
Loss on sale of
Okay,
asset
fair.
is added. Profit
Okay,
on
loss on
sale
sale of
of asset.
asset.
Loss
Profit will
on
be
sale of
subtracted.
asset is added. Profit on sale of asset is
Profit on sale of
subtracted.
asset is subtracted.
Then
Then what is it?
income tax refund.
Income tax refund. Yes. Income tax refund will be subtracted because you're getting.
Okay.
Okay.
What is this extraordinary?
Extraordinary. Uh,
X income. This is
okay. Yeah.
extraordinary income. So
Which
extraordinary
one?
income is subtracted and extraordinary
Okay.
expenses added.
Added.
Yeah?
Uh, Yes, ma'am. Okay.
Okay, fine. So you get your net cash flow from operating activities.
Yeah. Operating
You have any
activities.
tax paid?
Tax paid. Where is it mentioned?
Now see over here, tax
Yes.
paid, okay? You have your
Yeah.
provision for tax.
Yeah. Provision for tax.
That
And
means
we have
you have
income tax
provided
refund.
for tax 45,000.
Yes.
But you received refund of how much?
Refund of 30,000.
You receive refund of 30,000. That means tax paid is how much?
Tax paid is 15,000.
That means tax paid is 15,000.
Tax paid.
Okay. So you get
Yes, ma'am.
operating profit.
2
There
lakh.
is no working capital changes over here. But you get operating profit before working capital changes minus interest paid minus tax paid. You
Tax
get
paid.
net cash flow from operating activities. Are you with me?
Okay. Yes, ma'am.
Okay. There is no tax paid over here, but they've given you indirect information for tax paid. They've given you provision for tax and refund. So you've provided
Yes, ma'am.
45,000, you've got refund of 30, that means tax paid is 15. Are you with me?
Okay. 15. Yeah, fine.
Try the question number 14.
Back after considering the following terms.
Yeah,
Yes,
tell
sir.
me.
It is given that profit for the year is 7 lakh. So basically, profit as per statement of profit and loss, 7 lakh. And
Then,
then we will add transfer to general reserve.
okay,
There. Yeah, what is general reserve? 60,000. Okay. And then okay, so then we will add and subtract the items, which is depreciation on fixed assets and goodwill amortized,
and you will
both
subtract
to be
profit on
added,
sale of asset.
40,000 and 20,000.
So you get operating
Profit on
profit
sale of
before,
asset and prepaid expense.
yeah, so you get
Yes, ma'am.
operating profit before working capital changes.
The working capital adjustments. Yes,
Now
ma'am.
these are your working capital. This is your current
Yes, ma'am.
liability, current asset, and current asset.
Current asset. Okay.
Okay, come on. Current liability is
Trade payables.
decreasing or increasing.
It is decreasing. Decreasing.
So you will
Wait, no. Yeah, yeah. For
subtract.
current liability, subtract.
Current asset is,
Current asset is increasing.
I can say decreasing. How can you say increasing? From 60 it does be okay, increasing, sorry.
Increasing, yeah.
So you will subtract.
Subtracted.
And over here it is,
Okay, this is decreasing, so it will be added.
so you will add it. You will just write it in the sequence: decrease in trade payables minus
Yes, ma'am.
decrease in trade receivables minus increase in prepaid expenses add. So you get net
Yes,
cash
ma'am.
flow from operating activities.
Operating activities.
Then you minus interest paid minus tax paid.
Tax paid, yeah.
But we have no information given for that.
We don't need to.
Yeah. Now try this
Yes, ma'am.
question.
Okay.
Now please explain me this question.
Yes, ma'am.
Okay, come on.
Charles Ltd earned a profit of 1 lakh after
Mhm.
charging depreciation of 20,000
Okay.
on assets and a transfer to general reserve
The
of
profit is
30,000.
how much?
1 lakh.
Okay. What do we do for depreciation?
Now for depreciation, we will be adding it because
We will add
subtracted.
depreciation. What about transfer to general reserves?
Transfer to general reserve will also be added.
Okay, fine. So this is a profit transfer to general reserves will be added.
Yes, ma'am.
Okay, goodwill amortized,
Added.
gain on sale of machinery,
Gain on sale, subtracted.
subtracted. Very good. Other information is available: current assets and current liability. Current assets, trade receivable is increasing.
Yes, ma'am.
So what
Trade
will you
receivable is
do?
increasing. Current asset trade receivable is increasing, so it will be added, right? Subtracted.
Current assets, opposite
Current asset is opposite.
direction.
Opposite.
Current liability, same direction.
Same direction.
Okay, trade payables increase.
Trade payables increase. Current liability when it's increasing is added.
Okay. Prepaid expenses, what is it? Current asset or current liability?
Prepaid expenses is current liability.
Current asset. Please
Asset.
note the current assets and current liabilities.
Yeah. Yes,
Current
sir.
asset is increasing 200. Add or subtract?
It's increasing 200 current asset. Yeah, we will subtract.
Outstanding expense. Current asset or current liability?
Outstanding expense. I don't know. I think it's current asset.
It's a current liability.
Okay.
It is decreasing 2000. Current liability, same
Decrease.
direction.
Okay.
Okay. So
Yes,
now,
ma'am.
keeping this in mind, but you should know what is non-cash, non-operating expenses, what will come in profit before interest and tax, what will come in other things. Come on, do this.
Yes, ma'am.